Hello everybody, this is Rick and today is October 26, 2024. It's currently 4:40 p.m. Chicago time. It's a Saturday, there's no trading going on today, and this is lesson number 2 where we are going to discuss identifying trends. Now it's very important that you have first watched lesson number 1 because there is important information in identifying swing tops and bottoms that you must first understand before taking on the identification of trends by using that information that was presented in lesson number 1. So if you haven't done so already, please go back and watch lesson 1 first and then come back to this, and you'll get a whole lot more out of this video. Okay, again, I am looking at the daily chart of the E-mini futures, S&P E-mini. And you will see on this chart that I have plotted these little orange, yellow-orange circles. And from our lesson in number 1, what I've done is I have identified all the confirmed swing tops and swing bottoms from here on the left side all the way to the present day. This last price bar you see right here is October 25th. That was yesterday. If you remember from the lesson number 1, you would automatically be able to identify what October 25 or 25th price bar is called. It is a potential swing top because the previous day did not make a higher high or does not have a higher high than this current price bar. So this is a potential swing top. If prices start to move below its low, then this would become a confirmed swing top and it would get one of these little circles here. That's why it does not have one at the moment. Now that I've identified these swing tops and these swing bottoms, and again, you'll notice that in some cases, we end up with like 2 swing bottoms without a swing top showing in the middle. But again, if you go down to the lower time frames, such as perhaps a 4-hour, 2-hour, 1 hour, you'll find that the top occurred right there on this price bar. And if we keep going, you'll see this happened again over here. We have 2 swing bottoms without a swing top in the middle. And if you go to the lower time frame, you'll find that it happened on the high of this price bar. And again, we saw this yesterday, okay, right here. And we had 2 highs. Well, we knew that the low occurred in an earlier time frame right there at the low of this price bar. And then if you come up to here, you'll see we have 2 confirmed swing tops. And if you went to a lower time frame, you would know that that low most likely occurred on the very same price bar that made the confirmed swing top. You had the bottom right here on the same day. This was an outside bar. All right. And you're going to find out why it's also useful to plot these swing tops and swing bottoms, even the ones where you have 2 tops in a row or 2 bottoms in a row on a particular time frame, in this case the daily. And that will fall under the subject of setups, buy setups, sell setups, the trading with the trend, and so forth. All right, so let's identify this trend here. The first rule is that a bull trend is the formation of higher confirmed swing bottoms. Higher confirmed swing bottoms. You see here that we have this swing bottom. It is followed by a higher swing bottom. So far, this trend is moving up. Then as you go, here's a higher swing bottom, the trend is up. But notice that now that we come to this one right here, this swing bottom is lower than this one. Something has changed. So a downtrend is where you have lower swing bottoms, and you usually will have lower swing tops as well. This is a little different than normally a bull trend. A bull trend, you basically just would say higher swing bottoms. But on a bear trend, you usually want to see lower swing tops as well. Lower swing bottoms, lower swing tops. And in this case here, you see we had a lower swing bottom, and you can see that we had a lower swing high. Okay. If this high had exceeded and was, let's say this high was actually way up here like so, the violation of this one swing bottom would not have changed this trend. It would not have made it into from a bull to a bear. We need both. Also, it's okay that it goes below one previous swing low and can still be considered bullish. It happens sometimes where it'll go below the most recent, but you don't want to see it happen below the last two recent. In other words, if you saw a lower low that went below the previous and let's say one other, the trend has changed. Now in this case here, this is higher swing bottom, all the way up until this high right here. I'm going to go ahead and mark it. I'm going to put a line from here to the high here. Okay, that is our bullish swing, our bull trend, our bull wave, however you want to describe it. Now, if you see here, we have this lower swing bottom, lower swing top, lower swing bottom. Okay, and then all of a sudden here, we're starting to make higher swing bottoms, and it continues up. We're not making lower swing bottoms, we're making higher swing bottoms. The trend has changed. This is a bearish trend. Let's go ahead and connect it. There you go. Now, higher swing bottom, 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 lower swing bottom. So the high between the two, the highest point, is the end of this bull trend. Let's connect them. That was our bullish trend. Next, we have lower swing high, lower swing bottom. Okay, it's lower than here. Okay, right now we have a bearish trend or a bearish wave, if you want to call it that. Now, you have to understand that everything is in reference to the time frame. For example, we see that this is a bullish trend, and we see that this is a bearish trend. But while this trend was bearish here, the overall trend from the left side of this chart to the right side of this chart is clearly up. You can see with your own eyes that this is all going up. Yet within this up trend, you have these counter trends. So if you do not want to confuse yourself or anyone else you're talking to, because if you were to say, yes, the S, let's say right here, or even better, right here where we have this lower swing bottom and lower swing top, we're now in a bearish direction here. We're making lower swing bottoms and lower swing tops. That's a definition of a bear trend. If you were to tell someone that right now the S&P 500 was in a bear trend, they would look at you like you just came from Mars or something. Like, what is wrong with you? Anyone can see that this is a bull trend. As a matter of fact, if you were to go ahead and just compress the time here, look at this. You can see clearly that the stock market is in a bull trend from left to right. It's all relevant, or it's all in relation to the time frame that you are looking at, the scope that you're looking at. So to not confuse someone, you would say the stock market is in a bull trend, but it is currently forming a bearish wave or a corrective wave. So in a bull trend, which this is clearly a bull trend, start from the left of the chart, look what the price level is, go to the right of the chart and see where the price level is, and you can see that it's slanted up. So you know that it is a bull trend. And in a bull trend, as you are moving up, we refer to this as an impulse wave. Now, you don't really need to get into all that terminology, impulse, and in this case, corrective wave, impulse wave, corrective wave, unless you're going to get into Elliott wave. I don't dabble in Elliott wave, so I don't usually say these things to communicate with Elliott practitioners. But if you don't want to confuse anyone as to the fact that you're referring to this little bearish trending here, and you don't want to call it a bear trend because obviously the S&P 500 is not in a bear trend overall, but it is currently in a bear wave. It's a correction. In a bull trend, if it's moving against the trend, it's called a correction. Anytime that the prices are moving with the trend, it's referred to as an impulse wave. So right now, this is a correction. It's a correction of the trend. Here's the correction of the trend here. Here's the correction of the trend here. Notice up here, by the way, that we had this lower swing top here. But you notice here we did not have a lower swing bottom when compared to here. So you can see that we're only concerned about comparing the lows, the swing bottoms, for bull trends. In bear trends, we want them both. We want to see lower swing tops, lower swing bottoms. And in this case here, you can now see that the overall trend is definitely bullish, the overall, because if we went ahead and removed all the swing bottoms and tops that are not connected with the lines, we're left with these. These are your major swing bottoms and swing tops. All the minor swing bottoms and swing tops are no longer identified here. And in simplicity now, if you were to look at this, you would say with the major swing bottoms and swing tops, you have higher swing tops, higher swing bottoms, higher swing tops, higher swing bottom. It's higher than this one. So in this time reference, this overall move right here is a bull trend. And if you were to take it to the weekly chart, for example, so let's see, we got August 5th all the way to October 17th. Go to the weekly. And you can see that clearly shown here in this chart, that bottom and that top represents what we just looked like on the daily chart. And you can see that the only things marked on here right now are the actual swing bottoms and swing tops. We can see that this is a confirmed swing bottom. You can see that that's a confirmed swing top. Prices came down, confirmed swing bottom. Okay, you come up. Now this one here is a confirmed swing bottom, and this is a confirmed swing top. However, on the daily chart, if we do this on the weekly, by the way, yes, go ahead and you can mark them because they are what they are. Okay, it would be like that. And then let me see if I can get another one in here. Okay, this is what that would look like, just like that. But when you go back to the daily, of course, we have already identified the daily tops and the daily bottoms. And these two, here and here, we have no need for in identifying the major swing tops or swing bottoms. Okay, didn't mean to kill my line there. Let's get this. It's hard to grab stuff. Okay, let me get you out of the way so I can delete you and bring you back. That's how we're going to do it. Okay, so that's how we would identify bull trends and bear trends. And just remember, even a bullish wave, an impulse wave, like from here, August 5th, up here to August 26th, if you go down to a lower time frame, okay, I'm going to really have to crunch this up to get it in there. Let's see, is that okay, good. Okay, so this would be the August 5th to wherever that was, the August 25th. Let's see. We can see here on an hourly chart, you would have had a whole bunch of impulse waves. You have impulse, correction, impulse, correction, impulse, correction, impulse, right here, correction, impulse, change of trend, right here, lower, oh, we went higher here, we resumed. Remember, this went below two previous swings, so this would have been a bearish wave or a correction, trend correction, but this is the hour chart, and this is all how we would see things in a lower time frame. And we can go and identify our impulse waves and our corrective waves on the hour chart, the 4-hour chart, the daily chart, the weekly chart, the yearly chart. And you can really go down to the finite, all the way down to the itty-gritty, like you put a microscope on this thing. For our purposes within the membership and how we would use this information for timing our trades in using cycle turn dates, for example, our lowest time frame is the daily chart. All right, so that's it for trends in lesson number 2. In lesson number 3, we're going to talk about cycle turns, cycle pivots, pivot top, pivot bottoms, and what we would consider buy setups and sell setups. So I'll see you then in lesson number 3. Thank you.